Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for August 2018. Let's take a look at key highlights of July. The first leg of imposition of tariffs on $34 billion worth of Chinese products became effective in July, post which Trump fired his next shot by coming up with another product list amounting to $200 billion. India's exports grew 17.57% in June 2018 to $27.70 billion, while imports rose 21.31% to $44.30 billion. The overall trade deficit for Q1 financial year 19 is estimated at $32.32 billion as compared to $28.55 billion during Q1 financial year 18. The Indian rupee has depreciated from 63.5 in Jan 18 to 68.5 during July 18, led by rising crude oil prices, dwindling interest rate differentials between emerging markets and the US, rising trade protectionism, and gradual withdrawal of easy liquidity regime by global central banks. The GST Council revised GST rate on 88 items in its second major revamp since GST implementation. Nifty made a new lifetime high during the month, even though the market breadth remained weak. Only 26% of Nifty companies and 10% of NSE 500 companies made a new lifetime high. For each of the last 3 financial years, reported earnings per share was way lower than what the estimate was at the beginning of the fiscal. However, this quarter could see a reversal in earnings trends. Of the Nifty companies, Bajaj Finance, L&T, ITC, Wipro and TCS reported numbers were much ahead of expectations. Among Nifty constituents, 31 companies that have announced their results have reported revenue and PAT growth at 15% and 12% respectively. IIP in May slowed sharply to 3.2% from 4.8% year-on-year reported in April. The strong rebound in IIP to 7 to 8% year-on-year early this year has shrunk to around 4%, which is in fact lower than the pre-demonetization trend. EPS estimates for Nifty Index for financial year 19, financial year 20 and financial year 21 are Rs 593, Rs 695 and Rs 788 respectively. As per blended estimates, Index is currently trading at PE of approximately 17.8 times 1 year forward. We maintain a Nifty target of 11,500 for June 2019. We recommend investors to deploy 33% of fresh equity allocation, while the remaining can get invested over a 3 to 4 month period in a staggered manner. Clients having high exposure to mid and small cap via direct equities may look at trimming their positions and moving to large caps or managed solutions. The 10-year benchmark GSEC is hovering in the range of 7.74% to 7.91% on a semi-annualized basis. The bond yields have softened from levels of 8.00% on account of softening of oil prices due to an increase in output from OPEC and Russia. RBI conducted the open market operation purchase auction of securities worth Rs 10,000 crore in July, bringing the total OMO purchase to Rs 30,000 crore in the current fiscal. The CPI edged upwards to 5.0% in June 18 as compared with 4.9% during May 18. The surge was led by spike in fuel prices and hardening core inflation. The RBI Monetary Policy Committee hiked repo rate for a second straight time by 25 basis points to 6.50% in August policy review while maintaining a neutral stance. We expect benchmark yields to remain volatile and trade in the range of 7.60% to 8.00% with an upward bias of 25 basis points. Yield movement hereon will depend on inflation trajectory, supply-demand dynamics, crude oil prices, and global bond yield movement. We recommend investors to allocate 100% of their fresh fixed income allocation to long-dated buy and hold strategies and active accrual strategies with low to medium duration.